We would like to start with the introductory question. Joachim and Niels mentioned that this paper has to do with financial stability and deals with the question whether smart contracts can help to prevent bank runs. So the question is, to what extent can blockchain technology help to make the financial system more stable? And I would like to start with Pierre and then go a little bit around, get your perspective on the issue. Thank you.
Right, thank you. I think we are seeing at the moment a fairly unprecedented change in the financial system, where new technology gives us possibilities, opportunities that previous technology just didn't give us. The only thing that I can think of, having spoken to senior colleagues at Bundesbank when I still was there, was the first time digital payments were introduced. But I think the change we are seeing now is much more fundamental, because blockchain, for the first time, I think, in human history, is giving us the opportunity and the possibility to change how we see data and how we treat data. And that's not something that happens very often. So seeing how this technology is now being used in research to study how we can help and how we can best use it to make the financial system more stable, eventually more inclusive, more competitive, more autonomous, was a paper that we had at the academic conference yesterday that shows the positive impact of the discussion around the digital euro on European payment firms and the adverse effects on US payment firms. I think these are, in today's times, are important considerations, and seeing how technology brings this in, now research can inform this. I think it's very important to bring all of this together. So I'm very happy that Frankfurt School is the place where we can do this, where we can, provide the coffee and the cake, and then bring all those minds together to discuss these issues.
Yeah, thank you very much, and thank you for bringing in the idea of autonomy in the discussion, because I think that is crucial for our later discussion to see what it can help and what it can contribute. Yeah, Piero, what is your first view on the issue?
Well, I mean, as any technology, really depends on how you use it, right? I am not a technician, so I spend a little bit of time to understand what a DLT is, how you can use it. And when you confront new things, you have to anchor to something that you have in your mind. So I figure a DLT like a road, right? Something, an infrastructure that allows things to go there, right? So really much depends on what you put on the DLT and what are the rules that you put on the DLT to somehow make sure that the traffic goes in the proper way. So really much depends. One thing is that if you put a treasury bond on the DLT to make sure that you can settle the transaction in a fast way, you are able to do a delivery versus payment. Another thing is if you put strange assets there which are unbacked and whose price change every second, and depend who you allow to have access on the platform. So really much, I mean, again, the technology is pretty neutral, depends what you do and what kind of rule you put on that.
Thank you for this first view. So we are talking about platform infrastructure, and it very much depends on what is transported by this infrastructure. Yeah, Jana, talking maybe slightly rephrasing the introductory question by asking you on your first view about financial stability and blockchain technology. You have some experience with the bad sides of blockchain technology. So are you on a pessimist view on that or an optimist view? Is there, how do you think can it be helpful to make financial systems more stable? Up to you.
Well, absolutely. I think being the professional outliner here, I would like to keep it simple in the first place. The big systematic advantage of blockchain technology is that it reduces human influence. People make mistakes. The machines only make mistakes when people have programmed them. And you asked me if I was optimistic. I am optimistic because I see the effectiveness of such technology and what can it bring into the system. What I found so stunning about Maxi's paper was that when I was informed 8 years ago for the first time what cryptocurrencies were and how they worked as a prosecutor, I understood that blockchain technology is the the anti-system to centralized banking, you know, as an idea, you know, and he now brings back blockchain technology in the human-controlled kind of system, which I found stunning. So yes, I think that the advantages should be bigger, but of course we face a lot of problems because even that system is then in the end having human effects. Yeah.
Mm-hmm. Okay, so we have another idea added to autonomy. Then we have effectiveness and efficiency, and that we have less human sources of mistakes inside this. Yeah, Maxi, I mean, you have done so many research. Could you help us to go a little bit more into the concrete world? What is the added value of a blockchain when it comes to financial stability?
So I guess what we point out in this paper, before I tell you a little bit more concretely, you know, how it can be implemented, is what we kind of highlight is the role of information generation, information management, but also the role of trust, so that you actually trust that the bank is going to do the right thing at times of pressure. And I think there, something like smart contracts, something like code can be extremely useful because it can be checked. I mean, it's very hard to understand what a bank is actually doing, how a bank is doing. You know, banks try to create trust. I think that's why they're in their, you know, very nice, beautiful buildings. That's why bankers wear beautiful suits, you know. They want to signal a sense of everything is going well, so you trust the bank. And, you know, maybe there's a technological way of achieving this as well, and goes a little bit into the direction of what you said. You know, I can test it. I can see, you know, how this bank is operated, if it is operated using, you know, smart contracts, which don't have to be on, you know, like permissionless blockchains like Bitcoin, but a permissioned blockchain, which is, again, you know, a little bit more in the classic bank, essentially, you know, that operates this blockchain. But I can test much better what's going on. So maybe I can use this to create trust, and this, I think, is an opportunity.
Okay. So from a journalistic point of view, Piero, I would like to ask you, as a central banker on that, when I listen to you, I say, well, on a sunny day, I could imagine that building up trust is very helpful and a real asset. But what is when the rainy days are coming? If there is, we were talking about bank runs, how much worth is the trust that you have in a smart contract? But before you give an answer, I would like to ask Piero if you have the same, if you share this skepticism.
Well, first of all, we need to see some real movement to that, right? Into DLT. At this point in time is more, we see some market movement there, some banks experimenting with that, some banks trying to tokenize deposit to make the payments more efficient, to overcome traditional obstacles like the fact that, you know, RTGS, moving money is not so easy, especially around the globe, because you have I don't want to become too technical, but so banks are experimenting more on the margin and to see whether they can use it. They can use the DLT to improve their efficiency. As far as I know, I haven't seen any solution like the ones proposed in the paper of Max. This is maybe. But again, we are on an early stage of development of the market. Many entities are experimenting and see if they can use the DLT to trade asset in a much more efficient way. Just to give you an example, we can trade asset only for a period of time during the day. On weekend, markets are closed. So if you have an opportunity at 11 o'clock on Saturday night, today you cannot use. DLT could allow you to trade 24 hours. The three traditional function of trading, right? You trade the asset, you settle, you custody. Today you have three different entities taking care of that. You can put everything on the same platform, reducing costs, lowering costs, allow people small companies, for example, to try to sell their asset on the DLT. So there are many potential to DLT. And we require, the ECB, we recognize that there is a market out there. Just to go to your point of financial stability, we think that though to make sure that this market will develop, we need to provide central bank money to this market, because central bank money is the most reliable and secure settlement means. So what we are really doing now to make sure that this market develop without creating too much financial instability because of possible usage of private money in the form of, for example, of stable coins, we are working with we have been running experiment in the last 6 months to see if we can provide the central bank money for those that wants to transact asset on DLT. The experiment has been a big success. We had 60 entities experimenting different use cases, and now we are seeing a very strong demand from the market to replicate and make it at scale, which means that there is an appetite, and the market is experimenting that these possible benefits are coming true. So that's what we are doing now. So we are trying to make sure that the whole market can transit to this next generation of infrastructure in a safe way, using central bank money.
Well, I think everybody appreciate the way that you let experiment these business models or these experiments, and give them the way, give them the floor to try and maybe to error, and now think about scaling up after your first experiences. But Jana, is this a risky experiment? The question behind is, could some distortions already trigger some real systemic things there, as you have already experienced some hacks and some things not going well? Is there already in this experimental phase the risk of a thing which is really systemic, not just burden the ones who are experimenting?
Well, I believe that if we take smart contracts, for example, they are highly dependent on the precision of their code and the security of the blockchain they operate on. And this is the human aspect I was mentioning in the first place. So the technology can only be as good as it is coded well. And we see, because there are many blockchain technologies in the market already, and many products operating on them, and some of those cases end up in my office, that the slightest flaws and the slightest oversights, cause major damages. And you, Maxi, were talking about trust. And the funny part of that is that by one flaw in the code, the trust is destroyed. And then the consequences, of course, are very, very harsh, So I do not see a problem in the theoretical approach, and just having been presented by Piero, but of course, if you look on a large scale and the number of blockchain technology in the market, of course, there will be flaws, and therefore you have to scale up the possibility of access, which you would not like to have, fraudulent access, or which can lead to misappropriation of funds, or just unauthorized access. So that is a risk that comes along with it. And we see it already sometimes, yeah, indeed.
Yeah. Maxi, you or Pierre, please add.
Yeah, I absolutely agree. So, there is, of course, a sense in which all of these technologies can fail. And it would be, we will have to see, see whether, how well they function in the end. I think there's one nice thing, though, about, and this goes back again to, traditional banks employing these technologies, and these not necessarily being fully decentralized smart contracts. Then you can actually, post a new smart contract if you realize the code is erroneous. You can replace it. It's not like that it'll be a very hard coordination issue that you would face on a purely decentralized blockchain to actually update codes and so on and so forth, change protocols. So maybe that can help. But yeah, I really agree with you. In a sense, if these things go wrong, if they're badly coded, then things can go wrong. Luckily, they're often relatively simple, right? They're not really smart contracts. They're relatively simple if-then statements. So in that sense, it's not crazy code, I'd say, very often, yeah. Maybe you disagree, Pierre?
No, actually, I wanted to put a bit of emphasis on the novelty of the paper, right? We, in the scientific committee, we evaluated all those papers really rigorously. what we really liked is that there's a paper that shows us how we can use new technology to think about an old problem. Diamond and Dybvig has been a problem since 1983 that we know, and actually that already is 60 years after deposit insurance was introduced in the US. So it took the economists 60 years to figure out why it works. And again, 40-something years later, we award a Nobel Prize for it. So in this literature, it just took a lot of time, and we never have really had the opportunity to think, how does technology give us new possibilities to think about incentives, to think about some of the fundamental things for financial stability. So now with the paper, I think it really nicely bridges these two worlds. In the past 2 days, we had 2 academic conferences leading up to this sort of more industry-focused conference today, talking about what are the technologies that we can use, what are the limits of the technology, where are the risks. And I think this translation between sort of the forefront of knowledge that research pushes and the practical implication, and then bringing in the policymakers that have to find the right framework to bring those two worlds together. This is hard work, and this is something where you need a place like we have here in Frankfurt, where you can bring all this together. And I think this is exactly what I liked so much about those 3 days of hard work and intense debate leading up to a discussion. Today we had Ulrich Binzal from ECB talk about the digital euro with, from the industry, different perspectives being voiced on what do they need. I think this is exactly what we need to do to make the most of the technology, because otherwise we risk that most of what we make of it ends up in Jana's office.
I promise to be a little bit more on the chances. I have another more on the risky side, but before that, I would like to invite you. This is not a debate in front of you, this is a debate with you. If somebody of you has already an intervention, a question, yeah, here you have an excellent chance. So we have two who join our debate.
Yeah, so thank you very much. So maybe already one question towards Cipollone, because what you mentioned was that it's still everything a lot in product and in experiment phase and testing, etc. But what we have heard throughout the day actually today was that the industry is trying to move further towards scale production and setup, and that they're actually saying, I think it was a statement from BX Digital, from Börse Stuttgart, saying, well, we actually have closed our proof of concept phase. We're now going into production and really want to start through. And what we have seen as well in the setup, I believe, is as soon as there is central bank money, the push immediately was there as well in the volume size towards moving towards a proper setup. So, and then thinking one step further, right, to truly put them on the same level, securities, etc., the key question actually is ECB eligibility of digital assets. When will it come? Is basically the question, simply put.
Yeah, simple question, Piero.
No, I mean, let me first say that, by definition, the central bank are late, right? Because you are sample selected. Only very cautious people work at the central bank, so they are slowly moving people. But having said that, there is also a ranking how slow we are, right? This time ECB is among the least slow people around. So we are really trying to advance on this. So honestly, if you look at we show a slide when we present this stuff. If you look at the initiative in Europe, you didn't see so much stuff until 2023. When we announced that we were ready to engage with the market, at least to see whether they could settle in central bank money, you saw a lot of initiative coming out. So in some sense, this, increasing number of initiative is a little bit correlated to the fact that we were open to let the market experiment. So what we did, essentially, we tried to let them see whether there was a case. And we got this answer. Now the market is really pressuring us to go to scale. But I mean, you have to build a completely new system. The way we have done that is through three, if you want, handmade solutions that we're inventing just to provide some solution to the market. Now, if you want to go to scale, you have to make it a true, say, target services for those that understand what I'm saying. So you are moving from a sandbox to a real production. With all the legal dimension, you need to make sure that this is, the money is final, that, you know, all the legal. So there is some obstacles. Well, there is some time that, that is needed to transform. But the direction is very clear. And that's what the market is asking us to do. Give us the certainty that in X months, we will be able to settle those assets in central bank money. And this commitment is pretty firm. We issue a press release a few months ago in which we clearly stated that the decision body of the ECB, that is the governing council, was fully behind this idea of going forward with this. So it will not take years, it will take months, but we will be there.
Thank you very much for a very concise answer on the question. And we have another question by Duke Au.
Yeah, hi, my name is Dirk. I'm head of innovation at WM Gruppe, and we deal with data. And of course, my question goes into this direction. So I think, Jana, you mentioned that code is very important. I agree, but I think the data is even more important because you need to feed the smart contracts with data, correct data. And what is your opinion or your take on the current problem or the data oracle problem? And where is the risk in that if we have bad data availability or no data on chain? So because I think if we don't solve that, we can have the best theory, but we cannot see in practice that this is going to be successful. Thank you.
Thank you. Jana, you were the one who were asked, and later on I would like to ask the other panelists to join if you...
Yeah, well, I will have to ask again. So you said we have a data problem. Could you please specify what you mean? So what data lack would you mean? Asking a prosecutor?
No, I mean, in the end, if you have data on chain in a perfect world, it needs to be clear where data is coming from, that you can rely on the data quality. You know, data has to be objective. I'm referring to that. This is like the data oracle problem, where we get that. In the worst scenario is that you only have one source of data, you know, providing all of this. This could be like a potential risk for smart contracts, you know, doing the wrong thing.
Well, what I have learned over the past 8 years working in cybercrime is that the more data you have, the better it is, and that data needs to be integrative. I mean, you ask a prosecutor, and if I speak of data as evidence, you know, of course I must be sure of what I'm talking about. I'm not a banker, so when it comes to data sources in banking systems, I'm certainly not the one to be addressed. But what I see is the psychological problem in systems where people need to work with data and the reliability in data. And I think that psychological problem is even bigger than what you have just mentioned. Of course, you have to check the sources and be transparent about them. You know, that is, I think, the thing you can do about it. I don't know if I have hit your question, but this is what I can tell about it.
Maxi.
Yeah, I mean, I completely agree. I mean, the Oracle problem is a problem. It's just quite hard to overcome it because, you know, blockchains are relatively closed systems. So if you want off-chain information on-chain, how do you get that onto the chain with trust? The key is trust, you know. It's a tough problem to solve. I mean, one approach that I potentially like is there are institutions that we do have trust in, one of them being, for example, universities. One of them could also be, you know, other entities, maybe like some banks, some diverse group of institutions that we trust, and they could form, you know, like a committee of some sort that serves as an oracle, you know. So again, you know, trust is the key here. How to solve that? I don't know. I don't think there's a better way of bringing, you know, something into what is a closed system. Yeah, but I agree with you. Data is important. Yeah.
Detlef, are we on time? Can we do another question from the audience because there still would be one?
I think we are a little bit, I would take the last 5 minutes if I'm allowed to, and if you agree. We have a question over there? Or?
Yeah.
Yeah, come on. Okay. Go for a quick question. Sure. Sorry, I haven't seen you.
Yes, thank you. Donc, David Durochou from Société Générale. We see that the new US administration is pushing very strongly the stablecoins. We don't have a stablecoin in euro for now, or very small part. Will we let this enormous privilege to the US or not?
Did you get the question? Okay, please, Copier, if you could.
I mean, it's a question of approach. There's a discussion if you have a digital euro and it works, what exactly do you need the stablecoins for? There are use cases that you can make, but I completely agree. The US pushes it as a strategic objective. The question is, what is Europe's answer to this strategic objective? And at the moment, I think the ECB has taken a lead to say there is a European answer, which also, by the way, would have benefits for unified capital markets and capital market integration. MiCA, I personally see critical because of the benefits it gives to banks and the leverage it gives to banks. I'm not sure that this was absolutely necessary. I personally would have loved to see the ECB open up not only its payments accounts to payment service providers, but the facilities, so that there's a safe place for all those funds to go. If we had that, that would be a massive advantage, I think, for the industry. I'm not sure this is something that's on the cards, though, for a variety of reasons. And I also don't want to put anybody here on the spot who could possibly address this question.
I would like to take now the opportunity to start the final round. I learned that you talked about efficiency, about trust, you talked about autonomy. So very clearly for me, there are options that blockchain technology, that a new technology could help to make this financial system more stable. But what is key in your perspective? What is now key to really come up to the next step? Piero already mentioned that now there is the preparation for scaling up some models and so on. So who is really in the responsibility? We talked about the regulatory things. Is this now up to regulators to make this environment more stable? Is it more to market participants to really come up with their models and invest in their ideas? Is that more for supervisors or even for prosecutors to make this world a little bit more safe? What is your clue on that? And Copier, if you start, and then we go once.
I think that the answer has to start with that we are Europeans, and this is more important today than it was, I think, ever in my lifetime. So it's not any single one of us, it's all of us. The universities have to play a role, the regulators have to play a role. Scaling doesn't just hinge on having the right infrastructure, it hinges on having the minds that know how to build on this infrastructure. This is the job of the universities. We cannot be content with having a few people that we train here and there. This needs to scale as a first step. Ideally, as those minds come to market to transform the industry, the regulator is also ready to have the infrastructure to support this. And then we build on the partnerships with the private sector to put those minds and the infrastructure to use so that there's private sector solutions to the use cases that are emerging. If we have all of that, then I'm not afraid at all for any competition from the US. Then Europe can be strong and can have a strong answer to this. And I think that's exactly what is needed.
Thank you. Maxi, what is your clue on that?
So I think regulation is very important in this space. I maybe want to caution a little bit as to who the regulator is. I think that's an interesting question to be asked. I mean, we had a discussion today on central bank digital currency, and Ulrich Binzeil actually says, you know, when democracy ends, it doesn't really matter whether you pay with your card or with CBDC. Somebody has the data anyway. But maybe there's like, you know, a third alternative, which is, you know, maybe more international even, maybe more decentralized. And then there's a bit of a question, you know, who should be the regulator of that, you know? Yeah, maybe that's a little something I want to throw out there.
Thank you. Jana.
Well, you were asking who pushes the process forward, and to my experience, regulation never pushes processes forward and comes up with good ideas. It is, of course, necessary. Neither is the prosecutor the one having the good ideas. I think the market participants are very much in charge of coming up with good ideas alongside with a good regulation. Yeah.
Thank you. Piero.
Let me put it this way. Something that does not exist is stable by definition, right? So we first need to set up the condition to have this market to develop. And one fundamental condition is not to replicate the problem that we face today with the market infrastructure, which is a huge fragmentation across Europe. And this goes back to what was said before, right? We are in a competitive disadvantage exactly for that, because we are not able to take advantage of the scale of the European market. So we should take this opportunity to build a completely different infrastructure, which is by definition from the start pan-European. But to do that, you need the regulation. You need the infrastructure. Yeah. But you also need the proper legal framework. Today, the market is still fragmented at the national level, and we don't have anything at the European level. So maybe it's about time to start to think about the 28th regime that you can use to go directly at the European level. Because if we start with fragmentation, it will take forever to harmonize and to scale at the pan-European level, and I'm not sure that we succeed. So first we have to make this stuff exist, and then we will start to think how we can make it more stable.
Thank you very much. Well, I know that we have questions now here, but now we are perfectly where I would love to be at the end of such a discussion. We are not closing our dossier, but we have opened up some questions. A lot of food for thoughts, maybe now for having a drink and having some discussions. Thank you very much to the panelists. Let me say it on a personal way. I usually have the politicians, I'm the EU correspondent, usually the politicians in Brussels with me, and I ask questions and I don't get answers. Here I ask questions, I got answers, which is a special feeling for journalists. Thank you very much for this nice atmosphere. Second is, it's very rarely, I can't remember that I was more cautious than the central banker in the panel. So thank you very much for giving us a little bit the idea of what you are doing to move that issue forward. And we are having an issue which is where we always have to say it's maybe a little bit early to draw conclusions because there is so much moving. That helps us because then next year we can see what has moved. Thank you very much, and thank you for your engagement.